a lot of debate over all this, but we look at what's been happening on the yield curve with 2s and 10s, particularly in focus here as well. Now, the last time we saw an inversion like this was 2000, when the Fed had raised rates to 6.5%, and they were looking at that stage, the market was looking at perhaps 8% here as well. But the yield was distorted then by the healthy state of the Fed's finances. This time it's quite the reverse. How does that distortion now affect things, and how much real kind of attention should credit markets be paid to this?
Well, I think just now I just hearing to through all the various news view about how Fed is going to happen in September and day beyond. I think the JPMorgan house view is that we're going to see 75 basis point hike in September, followed by 25 basis point hike each in November, December. But what is really clear from us is actually what is matter more for the credit market is that we are nearer to the end of the high cycle than the beginning of the high cycle. So that's really what is important. And also, you look at how the Treasury market have behaved. You have to turn out to be much more. You say volatility is still there, but it's much more moderate compared to the initial part of the year. And that actually is an encouraging sign for investor. Also, we have to understand that in terms of oil yield, the market right now, the JPMorgan Asia Credit Index is now trading closer to 6%. So that is actually quite a tricky level for a lot of investors, and that's why you see that once the volatility in the rates started to stabilize, people started to add on to the risk, in particular in the investment grade side.
Okay, so it's maybe the softer CPI print that we got in the U.S. overnight, then does that add to that story of dialing up risk and being more bullish on Asia credit?
Yeah, I think to some sense, you can say that it's a sign of relief for a lot of investors. I think we have seen the JPMorgan index dripping down since the September last year. So it has been a very tough one for everybody. But right now, I think going into August, you see that the JKI have actually recovered by 2 percentage points from the low. Yes, year to date, we're still down like 10%. But it's still a relief to see that markets are stabilizing from here, and that's really the good news. I think obviously the one that's really caused the recovery is really the investment grade side that have recovered. High yield for Asia is still a bit lagging. This is because of some issue that we still have for the China property for now.
Right, and I was going to get to that, Soo Chong. You mentioned that we're nearer the end of the tightening cycle than the beginning. Are we near enough for junk to look valuable right now? Is there value on the high yield end of the spectrum?
Okay. I think for high yields at the spectrum, I think the key thing that we have to understand is really also about fundamental. I think in terms of valuation, yes, the sector looks cheap, but I think the other part that we have to also understand that as much as we think that we are near the end of the cycle, for FX cycle, we are still talking about economy could continue to slow down, and the downside is still there until we see the economy, really global economy bottoming up. The concern on credit fundamentals still going to be there. So that's the reason why we are, going to second half, our focus is really more on the investment grade side and higher, just because I think as much as we say that, the rates is positive for the market, I think the credit fundamental deterioration, especially for the higher side, could mean that spread could still widen from here.
Soo Chong, when you have the hunt for juice, as it were, and you are in the investment grade space, where do you go?
Well, I think in the investment grades right now, you look at the investment grade yield, it's actually not that bad. You're talking about even single A, you can get 4.5%. This is something that at one point, this is how the high yield is trading, just like one year ago. So this is one thing we have to understand. And for investment grade side, we do see a couple opportunity. We do like defensive sectors such as in the infrastructure and utility. We also see that some financial with very strong parental support that's not reflected in the bond prices. Those are the area that we do like. I think we also like the corporate hybrid. Those are very short dated, and they're still in terms of yield, they are still giving you a good enough yield. to come back to the point on high yield, are we totally shy away from high yield? The answer is no. Yes, I mean, China property is still more a policy call, but outside of China property, we do like the Indian renewable space. We do like energy names in India and Indonesia, and also some recovery. I mean, economy opening place in India for such airport, and some consumer name in China. These are the names that we still like.
Soo Chong, real quickly, in terms of where you think the pain trade is going to be for the bond market, when do you think we're going to actually see that peak when it comes to U.S. Treasury yields?
Well, I think right now, you see, the way we look at the U.S. Treasury yield, I think normally when we actually expect that Fed will start to plateau out, I think by year end. I think usually the Treasury market will factor in. I think we'll start to stabilize, maybe 2 to 3 months ahead of time. So probably our house view is actually expecting the Treasury to stabilize in this quarter, maybe in September, and this is why the market started to get under the risk. And the other thing also we have to understand that the market in terms of technical is actually has set out to be much more favorable going into the fourth quarter. Yeah.